So I want to just dive right in, start in Europe, because there's a lot going on in Europe and a lot of the issues we're talking about converge there. And really want to look at a time horizon of, say, the next 3 to 5 years, the big macro trends that are going to be most important and the opportunities that meet them there. So Afsaneh, starting with you, particularly when it comes to energy, you've done a lot of work in renewables. What's the big lesson of what we've seen happen in Europe over the past few months?
So it's the lesson we've all learned as investors: diversify, diversify, diversify. So the fact that Europe was so reliant on one source of energy, particularly with natural gas, with a pipeline that connects you from one country to another and you can't move around, was, in retrospect, shocking. So at the same time, obviously, it's a huge opportunity. In the short run, they're moving to coal in a big way, which is terrible for all of the rest of the globe.
But necessary, right?
If they want to heat their homes and they want to run their businesses.
Yeah,
yes. But I think in the medium term, there's a lot of opportunity now. It's probably going to push them towards renewables much faster. So this terrible war with Ukraine might end up having a silver lining in terms of getting renewables faster into Europe.
But one more on that with you. When you say diversify, a lot of times when people talk about renewables, it's almost as if you can shift entirely to renewables all at once, which isn't diversified either. So what is the answer there?
So, obviously, for example, in places like Denmark is like the biggest producer of wind turbines. There's a lot of potential in Europe in certain areas for wind. Solar, in some countries like Iceland, you can do geothermal because of their volcanic nature. So different countries will have different options. And then a lot of the LNG plants that are getting built can move towards hydrogen as hydrogen becomes, a bigger fuel. Last but not least is really the big elephant in the room, which is nuclear. Yeah. And there are different views on nuclear, but potentially nuclear, with the right technology, with the right safeguards, with the right waste management, might also be an option. So there is a lot of renewable options.
Julian, I'll start on energy too, since I'm sure you have some thoughts, but I want to go into more with Europe with you too. What do you think is the big, I hate to say investable lesson, because what's happening in Europe right now is so much more important than just investments, but people have money at stake.
So, just terrible policy going back over decades, this decision, and they were decisions, and you can understand in some ways why they made those decisions, but to get out of nuclear, to leave yourself so dependent on somebody who it wasn't a case of let's keep our friends close and enemies closer. I think the relationship that Germany had with Russia, they were trying to forge closer links. I think Merkel was born in that era. She grew up in the post-Second World War era, and I think was always very focused on bringing the European Union closer together, very focused on defending the euro, and I think forging closer relationships with Russia was born out of this. If we're close and economically tied, then that will make us safer and less likely to end up in conflict. But it just left them hopelessly exposed. And I think the energy shocks there, the mood in Europe. I was in Germany actually back in June, and I had a German industrialist sitting on either side of me, both kind of feeling almost embarrassed by how close and they'd allowed themselves to get and how dependent they'd left themselves on it. I think chastened by the advice they've been getting from the US for years about not leaving yourself so exposed.
Is there a lesson writ large? There'd been sort of this keep your friends close, enemies closer idea, engagement with both Russia and China. And it hasn't worked out the way that people hoped. And so what's the lesson going forward based on what we've seen over the last 5 years out of Russia and China?
Well, I think in that case it was just way too much concentration risk. They did start a wave, Germany started a wave of renewable energy 15, 20 years ago. They should have been more attuned to this, because when they did that first push for solar panels at a time when the efficiency of solar panels wasn't so great, and Germany's not the sunniest country in the world, and they did that first wave and push, all of that, all the subsidies associated with that got pushed through to the industrial companies. And I remember we had an investment in the company at the time, in Germany at the time, and they were seeing 10 to 15% energy price increases year over year because of this push, because of the initial push of renewable energy. and it was crushing of the margins to these businesses. So I think that's possibly what led them to leave themselves to be more dependent on the cheap gas. But they were just way too exposed. You can't put yourself in that position. So look, there's an opportunity to change things quickly. If you look at what happened in Japan post-Fukushima, like the speed with which they introduced renewable energy over the next 10 years was quite extraordinary. I mean, we developed many gigawatts of nuclear energy in that country. Others did the same. It was quite, not overnight. It's not going to fix the power market in the next 6 months or 12 months, but over a 3, 5, 10-year period, you can have a profound effect on the power supply.
You've done a lot of work in Russia and throughout Europe. What are people not understanding about Putin's economic goals and what the impacts are going to be, however this works out over the next 2 to 3 years throughout Europe?
How long do we have? We could go very deep on this. We could
minutes.
go very deep on this. I'll try to keep it brief.
Yeah.
I think that I think Putin probably felt like he had no choice but to show strength. I think he feels like they were being taunted. They've been taunted in Georgia in 2008. They were taunted and they were taunted into action in Crimea in 2014. So I think they felt like there were breaches of promises made historically around Ukraine remaining as a neutral buffer zone between the countries. And I'm not saying whether it's right or wrong, but there was a perception from Russia that the West was not standing by those long-standing agreements and were increasingly meddling in Ukraine. So I think he felt his hand was forced, unfortunately, and I think he underestimated the resistance that he would face when pressed, and it's hard to see a clean way out at this point.
And now, Afsaneh, there's also a lot at stake when it comes to food.
Yes.
Ukraine being the breadbasket of Europe. What are the lessons and opportunities there? We've seen inflation driven not just by energy, but also by food out of this. So where do you put money to help make sure that we're not in this same position again, and that there's an economic backdrop to help things be better?
I think on the food front, Ukraine was, breadbasket for the rest of Europe, but importantly, was providing a lot of food for Africa. And there are some African countries that were almost entirely, if not just like Germany was with gas, with Russia, they were hugely reliant. So I think while in this case, we were getting affected in a big way, the lesson, I think, is that food is diversified. It is being produced all over the world. So the Ukraine issue is going to continue having a big impact in terms of, because it's being 10% of certain grains, it is going to impact in the medium run, the price of food, which is one reason we think one of the big opportunities to invest in right now across the globe is in food.
So how do you do that? What do you invest in?
So for example, we've done some investments like here in the US in a company called Gotham Greens, but they will produce food in urban centers. We look at ways, not just directly at food, but how to reduce the water consumption. There's a company we're looking at that will reduce water consumption for like almonds and pistachios and other nuts in California by 20%. These are crops that take up a lot of water. So there are different ways of doing it. Obviously, fertilizer is a big issue, as you said.
Where do you put money
in Ukraine?
Where do you put money to perhaps seize on demand for diversified sources for the elements of fertilizer?
So fertilizer is generally made where there is hydrocarbons. So most fertilizer plants in the world will be close to hydrocarbon centers. Mm-hmm. So a lot of Middle East countries have been producing fertilizers.
That's much more stable.
Absolutely. But you're also experiencing food and fertilizer nationalism like in India and other places. So you're experiencing all the things we talked about in energy in food also. And I think the lesson there is diversify your sources of food and do more local food, close by. But with regard to fertilizer, some of the new technology and some of the technology that is getting developed around the food industry will reduce the use of traditional fertilizers. And I think that will be the way you deal with it. Just like, you reduce the amount of water we need, reduce the fertilizer needs, but also transfer that need to some other ways of producing. Like the Gotham Greens, for example, the process does not use the fertilizers that, or uses like 1/10 of the fertilizers that we would use in other processes.
Right. Julian, do you have a view on that, whether it's agricultural writ large, or going down to fertilizer, and the demand for diversification in that, and where there might be opportunity based on what we've seen happening and the population expansion that we expect in various areas over the next several years?
I think the problem with this space is very hard to get scaled exposure. Like there's obviously some of the large agrochemical companies that you can invest in, but in terms of buying land, getting exposure to almonds or avocados or apples, it's very hard to do it at scale, and it's quite operationally intensive. So I think this is a developing asset class, and you're starting to see more and more people try to create institutional scale investable product to start getting those exposures. I think it's still a relatively nascent asset class, but one we would expect to grow meaningfully. But it's a real specialism, and you need to have separate teams, separate pools of capital, and the returns are typically long dated, and there's you have to have some kind of, no pun intended, appetite for that kind of return profile.
I want to shift and talk about enterprise tech.
Yeah.
Right now, there are some pretty entrenched big tech platform leaders. There are also a number of smaller, much smaller companies in the sub $5 billion range recently. They used to be closer to 20 maybe. There's a lot of innovation happening in the space. So if you're targeting a particular big picture trend that's going to have the most influence on what's important for enterprise tech, what would you say that would be?
Well, first of all, what's fascinating to me is if I go, we have our growth equity investment committee each week, and it's a little slower right now, as you can imagine. Most people aren't wanting to take capital at a price we would want to deploy at. But certainly through last year, the last couple of years, 3, 4, 5 companies a week coming through that committee that you've never heard of, that are worth a couple of $100 million to a couple of $1 billion, that are capable of being worth $3 to $10 billion. That was kind of the area we were playing in, less of the 50 billion trying to become 100 billion. And companies you've never heard of doing small niche things, but doing it very, very well and very efficiently, where they could become a dominant player in that. It might be, sales force or sales management for retailers, or inventory management for this, or enterprise software for this particular narrow niche or sub-segment. So there's just incredible innovation that's been enabled by the development of cloud computing and the ability to just scale up companies so much more quickly and easily in a more asset-light way. And I think that innovation, notwithstanding this disruption that we've seen, where we had a period of heightened excessive valuations that have corrected, I don't think the underlying theme has changed, and there continue to be the emergence of many, many of these companies that you can invest in. And I think that's set to, I think we're still in the relatively early innings of that.
What are the most important filters to use on those? Procore comes to mind, construction management, or Samsara recently came public in tracking of elements of the supply chain, both sub $10 billion, both public right now, kind of in those niche sort of areas. And these are the sorts of companies that, a decade ago, people were saying, oh, well, these companies are staying private too long. We don't have the opportunity to invest. Well, you got the opportunity now, but it's scary. Are those the kinds of things that you're talking about, or different?
Well, just to take it away from specific businesses, I would say that I think finding companies that have a very sticky component to the service that they provide, more subscription-based, more recurring-based, less transactional-based, things that provide critical solutions, things like cybersecurity, supply chain management, things that once they're in, they're very hard to rip out of the company, where the kind of gross retention rates are very high. So I think that we have dozens and dozens of these investments that we're making a given year. And I think that space is, what's interesting about it, they can grow into the valuations because the rate at which they're growing. And when you're trying to exit a company at a $3 billion valuation, you have a few other options than when you're trying to exit at a $30 billion valuation. At that point, you have one exit option, the public markets. Therefore, you have to have transitioned to typically profitability and a different stage of growth, whereas many of the companies that we invest in, they have exit options beyond going public.
Yeah. Afsaneh, there's so many areas where you can apply cloud, enterprise software concepts that have arisen over the past several years. Education is one of those where I know that you've put a lot of focus. And aren't there a lot of demographic trends pointing in the direction of that being important? And also economically, if we are heading into a downturn, that's when a lot of people try to go back to school, right? How do you see that playing out for that particular area?
You're absolutely right, John. So during the COVID period, obviously, a lot of these edtech companies did particularly well because people started working from home or from different sources. I think there was a lot of lessons learned about the shortcomings of the technology, the edtech types of technology, but also a lot was learned on how to improve things. And the teachers got a lot of training also, as well as the students. So I think as we go back to this sort of hybrid mode of work, you're going to have a lot of situations where, ideally you want students at school in person, getting the education, but it doesn't mean you don't also use the edtech tools. You might just be using them in a different way. And it won't be just getting private tutoring for those who can afford it, but it can help democratize and to bring a higher level of education to more kids who may not have had the access. Last but not least, there are a lot of rural areas and areas where you don't have the same access to the same level of education. So it doesn't mean that the same tools that we developed over the last 10 years that were used very intensively the last few years we're not using anymore. And then last but not least is in a lot of poorer countries where they have a huge application. So I think having developed it is great, and the applications will be different, but they will continue.
Where do you think the bigger near-term opportunity is? Is it for the likes of a Coursera that's engaging with institutions of higher learning more and moving through official channels, which could in some ways be slower but higher dollar? Or is it the likes of Thinkific or Kajabi that are more doing training and courses, a little bit more individual entrepreneur and retail driven, smaller dollars but potentially larger scale?
Again, it's not an area that I'm an expert on. However, what I'm seeing, which is interesting, is even the Coursera-like companies are also moving into giving people this shorter certification for doing specific courses. So it might be that they are seeing that their profit margins are higher, or their model is evolving. So it might be that the two trend towards each other. But no question that the for-profit models that have developed, one, they have to some of them have to clean up their act a little bit more than they have. But secondly, they are going to move more towards provision of not just the education as it was, but also a lot of the training, like in Germany they used to. I don't know if they still do. On-the-job training.
Oh, yeah.
Julian, when you look at this from a growth potential perspective, another piece of this retraining puzzle is what's happening with AI, with robotics, that's going to displace a certain segment of the existing workforce. Does that create demand for retraining in a way that particular technologies solve, where you guys see opportunity?
I think it will, but whenever people get overly concerned about AI replacing all these jobs or robotics changing all these jobs, just think about how many jobs exist today that the job didn't exist 10 years ago, or 30 years ago, 40 years ago, 50 years ago. Personal trainers, dog walkers, dog groom. There's all these
e-commerce warehouse workers.
People focus on dietitians. There's all these industries and jobs that are created and emerge. But I do think people have to be agile. People need more training. I think it's a complicated space because look, at the junior level, you obviously, the preference is to have young kids in school because there's not just an educational component, there's a huge social component to learning. But some of these online tools, many of which are made available for free, by the way. I don't know if you, I sometimes end up resorting to Khan Academy to help my kids with their homework if I get stuck or I'm a little outdated on something. But I think I think an area where there has been some evolution and there needs to be more is higher education, because the costs are just becoming so prohibitively high. People may prefer to attend a full-time college and get a full-time degree, but at some point they just won't be able to afford it.
Right.
So.
Right. Well, I want to touch on a few different things and actually jump over to real estate now, where I know you, Julian, have done a bunch of work. What's the smart approach to that market right now with rising rates, with high inflation just across the board? Rents continue to be pretty high, and yet the economy is slowing down. Maybe that's going to have some effect on demand, though people still got to have a place to live. How do you look at real estate both in the U.S. and then perhaps in other regions where there might be different opportunity? Yeah.
So whenever anyone asks this question, I always have to start by saying, like, real estate is the ultimate local market. Like there's a macro component, and you can't get that wrong. But so much you can't really generalize. You have to go into sub-asset class, and then even by city or region, and one side of the street versus the other side of the street can be a good investment versus a bad investment. So but I would say generally, you go back a few years, what were the core sectors that people invested in real estate? It was office, it was retail, it was industrial, and it was multifamily. And some of these now more talked about asset classes like life sciences and data centers were still on the come. Two of those four people don't want to invest in today. I mean, investing in an office asset, it's like a fixed income bond in many cases, or it has some mild rental uplifts. It's interesting. Two years ago, people would have said, I'd love a piece of real estate that has a 15-year fixed lease to a high credit quality counterparty. And now that's viewed as the worst thing to have because you've got no ability to reset your rents. You'd rather own a multifamily asset where you can push up rents with a high degree of frequency, or an industrial asset where you can push them up. It's interesting. One of the things we're seeing now is, adapting your leasing strategy. To have shorter term leases, you're taking some risk by doing that in order to benefit from the rental lifts. But I would say, right now, today, I think industrial, multifamily are the more investable, and some of those emerging asset classes are the activity level is quieter for now. I would say US is the predominance of activity for us right now. I think Europe is complicated at the moment, and the prices need to reset further. The one thing that's holding back the whole space, of course, is financing. The financing for real estate is just being grinding tighter and tighter. Even with every day that goes by, it seems to be getting more challenging. So the levered returns don't work in some of these spaces right now.
So is work from home and hybrid going to cause an oversupply then in office and eventually a price drop?
So again, with office, it's very hard to generalize, because let's say you wanted to get a couple 100,000 square foot lease in West Palm or in Miami or even in somewhere like Dallas, and you wanted it to be reasonably, and you wanted it to be LEED compliant, gold or platinum. You wanted it to have a modern floor plate. You'd probably have to build it. You'd probably have to build it, and there's real demand for that. So if you have high quality product, new floor plate, ESG compliant in emerging growth cities, there's huge demand for that. And the flip side of that, if you own a B-class office building in the wrong part of New York, there's no buyer.
Afsaneh, let's talk health. Our population in the U.S. is getting older, needs a lot more care. Technology in part being applied to that. What's your investment approach? Where do you see opportunity in that arena?
You're absolutely right. The share of health is about 15% of MSCI, or if we look at our GDP, it's a very, very large portion of the GDP, and it's been increasing, if anything. you're not having just people getting older and needing more care, but you also have on the other side the fact that fewer people are going into the health profession. And during COVID, you got even more people exit the health profession. So it's a lot of what we've seen about quiet quitting. There's been a lot of that also in the health sector. So you're having a supply and a demand issue on both sides. So on the negative side, that has affected care in a very big way. On the positive side is obviously producing a lot of possibilities. One is, the things we read about. You had a lot of stories today about, about a drug for Alzheimer's, which got a lot of attention. There's a lot going on in biotech. We've done a lot to do with longevity and old age and invested with a number of companies that are doing that sort of thing. But getting out of biotech, there's a lot on delivery systems. Again, as people age, there is a lot of devices that are getting built to just deal with people who are aging and will need these kinds of devices. And then last but not least, the biggest area, I think, given that more than 2/3 of health sector gets spent on the actual delivery, and that's where there's a huge amount of inefficiency. Technology can be something that makes a very big difference. So a lot of potential for improving the health sector, but also a lot of potential for investing. Last but not least, as we all know in this room, biotech has got killed over the last few years. So if you were investing, you did get killed. And at the same time, that means that it's a great opportunity moving forward. There's just a lot of things that are brewing that could do really, really well over the next few years.
On delivery, what's the takeaway from what we saw happen with telehealth, where big growth during the pandemic, and then actually it pulled back when people were able to go back into doctors' offices? People did.
So actually, interestingly, in some areas people did, in some other areas not necessarily. In mental health, which has been a very big growth area, the continuation of going, not going into the office, both the doctors didn't see they needed it and the patients. Now, I'm not saying that, just like you were talking about education, it might be beneficial to go in person in many, many cases, but the fact that you had that ease has continued. In some other areas, it was actually the health system, because you could have seen any doctor anywhere pretty much in the country, but the rules now that were set is that if you're in New York, you can only see your doctor in New York. You can't see your doctor in some other place. So there's some. So while it's not just that that we decided to go back, I think, but it was that we also had all these rules and regulations come back that we used to have that went away during COVID. So going back to the opportunities, I think it's not just telehealth, but it is really using a lot of the information on healthcare. None of us have like a file that we carry everywhere, but there's a lot of work that's getting done that is going to probably help us, so that no matter where you are in the world, your health file is your health file, and it's not in 20 different doctors' offices. And that's going to make things very, very efficient. Very simple things. Ultrasound. We all have seen an ultrasound machine. It used to be that it's only used by radiologists when you go see a radiologist. Well, now they're having them in emergency rooms, so as soon as you come in, they can do that. And that means that a very young student or not very trained person can give you more information than a cardiologist who's been trained 20, 30 years. So there's simple technology to be applied as well as more complex, and then that helps a lot with the delivery of better systems. So
3 to 5 years, Julian, what's the biggest health investment opportunity?
Well, I think this confluence of health and technology is a great theme for the next 20 years. I think, and besides there's the innovation point, but then there's really just delivering medicine at a more affordable price. It's just too expensive here. I mean, there's no way you'd rather be sick if you can afford it than the United States. But there's a big qualifier there if you can afford it. So I think one of the reasons there's been less progress there is the regulations. If you look at the innovation that's taken place in media over the last 15, 20 years, it's just been like blown apart, like completely, the whole industry's been kind of reimagined, price points have come down, And there's been some progress, but there needs to be a lot more to be able to deliver current levels of service at more affordable pricing. It's just I mean, just think about it. It's one of the more stubborn areas of inflation right now. Housing and healthcare, along with education, the three probably most important things, is where you're seeing the most stubborn inflation because of for a variety of reasons. But I think some deregulation and innovation and technology is going to be instrumental in driving those costs down.
Which innovation?
Well, I think there's, I think there is some of the, the basic tests. If you think about when you go to a doctor, some of the basic tests that get done, so much of that could be automated so that you're only getting, think about it right now. If you have a problem with an airline, it used to be, you pick up and you'd call and somebody would answer the telephone and they'd resolve your issue, and that's no longer, you have to fight pretty damn hard to get through to that person. Mm-hmm. You start out on the text chat, then you'll go to the frequently asked questions, and then eventually you'll work your way through to the right person. And I just think there's a lot of point of entry services that can be done in a more automated fashion to free up the doctor's time to spend on things where it's really needed.
So is Amazon going to solve that? I mean, are those some of these efforts that we're seeing to bring big data and cloud capability to bear with a large enough patient base and enough health professionals to?
I think there have been a few experiments. Amazon has done it. I think, some others, Google and Apple and JP Morgan and lots of different people have done the experiments. And I think it's going to be, we're going to need a few experiments until it gets done. But no question that it's in the right direction.
So do you think the growth potential is more with those who can afford to build scale to apply data to the problem, or is it with the smaller, more nimble innovators who might be closer to?
I mean, healthcare is just, it's 15% of the GDP. I mean, there are just so many areas to go at and attack. So I don't think it's one or the other. I just think there are multiple points of entry where you can invest in this space.
So from Goldman Sachs' perspective, that's how you look at it. It's like if anybody comes to you with a health tech idea, you're going to look at it because of the opportunity size, or do you say, well, you need scale?
Yeah, so we break it down. So we have, we have a growth equity fund where we're looking at growth equity stage companies, minority stakes, and it's a variety of different things within the healthcare channel that we might be looking at. We have a life sciences business, which is doing much earlier work around genomic medicine, precision medicine, use of AI in diagnosing illnesses. Then we have, within our real estate business, we are developing certain life sciences facilities in order to benefit from the increased investment that's going into that space. Within our credit business, we finance a lot of larger healthcare companies that have more steady cash flow stream. So we're investing in healthcare in many, many different ways. So it's not like one thing or another. It depends by strategy.
Right, but you don't have.
It's also healthcare is one of our largest areas of investments in our private equity business as well, in our controlled buyout business.
But thematic preferences and what you think is most important when you're even across those different types of investments. Is it the aging population? Is it the shortage in healthcare workers? Is it some particular capability that technology accelerates that you think is most?
Again, there are a number of sub themes. It's provision of services to rental of equipment to hospitals so they don't have to buy the equipment. It's precision of labor. It's diagnostic software to help them. So it's a pretty diversified set of themes.
And then to close, Afsaneh, just going to take a flyer here. Crypto.
Yes.
Does it matter for the types of themes and investments that you think are important to move the needle? I mean, we've been through a hype cycle in crypto. Some say we're in crypto winter. Maybe it's fall. I don't know.
Yeah.
But is the underlying technology important for the movement of money, for the distribution of opportunity, for the identification of where assets can go?
So there is a certain democratization of finance that's the positive side of crypto. And I think that maybe will come out of, as we come out of the mess that crypto is going through, will be a positive thing. There's also the issue that, there are a lot of countries that don't have good banking systems and good financial systems, and so there are the positives. The negative side, which has been the fraud, the money laundering, all of that, I think the regulators are trying to get a hold of that because there was really no uniform regulation of crypto. I think now we might go to the other extreme, but you do need some sort of regulation so that you have the good parts of the fact that you have this currency provided alongside some sort of regulation. I think the other interesting part is sort of the whole blockchain infrastructure, which is going to, that is no question that, everybody's going to invest in that in a whole variety of ways. A lot of the things that we talked about in the climate side or other areas that we've talked to is going to be a very essential part of things. And then last but not least is the fact that as some of the platforms have reduced their energy use, because that's very energy intensive, is going to also be a positive force. So
The merge
I'll end it there.
certainly
Exactly.
helps. Big growth opportunity in crypto to close?
I try to spend a couple of hours a week reading and getting more educated on the space, and I think it would be wise for many people to do that, if for no other reason to expand your mind at the weekend. Plenty of good blogs and podcasts you can listen to. I think until such time that there's clearer regulation, it's going to be a niche product to speculate in, a niche product if you're in certain countries with currency control laws or inability to pay in dollars, there are some niche strategies. And if you're a US-based investor and you don't want to miss out, could you put some small percentage of your net worth into it? Sure, fine. But until such time that the regulatory environment is clearer, I don't see it becoming more pervasive in financial services. And look, we've had peer-to-peer networks before. That's how banking started 2,000 years ago. And then gradually it evolved over time, and there was a realization that there was a need for a trusted intermediary with regulations and capital rules. Same in securities law. You've had various bubbles emerge, whether it's poppies or tulips or railroads. And then over time, people realize, well, that didn't make any sense, and it gets regulated. And so I think it's going to be relatively niche-y until there's greater clarity around regulation. Doesn't mean it can't be very large, but it'll be a niche within the overall financial sector. And then on the use of the technology, I think there's a lot to. I think there's some opportunity there, but I do think again people conflate tokenization and blockchain with just simple digitization.
Right.
We have a means of delivering fractional ownership today. It's called owning shares. Can you buy and invest in funds digitally in a way? Look, if I could push a button on my phone and buy and sell funds at will, real time, 24 hours a day, 7 days a week, 365 days a year, and there happens to be a trusted intermediary on the other end, I think I'd rather have my money there than some ethereal kind of concept where